Boom, we are live, ladies and gentlemen. Whew. What a wonderful time it is to be in the markets, whether it's up or it's down. If you know what you're doing, there's a lot to be found. Now, we're gonna go ahead and we're gonna dive right in, straight to, actually, let's go here. Boom, okay, so this is the arcanebear.com website. I suggest you visit here. This is for private members only, but these are our custom Wyckoff accumulation ranges. Now, one of the important parts to remember here is that looking for any type of accumulation, distribution, redistribution, or reaccumulation range is that these are like finding footprints out in the wild, and although the animal is identical, the footprint is often vastly different. And one of the important parts to recognize is that you're going to get different variations of these accumulation patterns. Now, for instance, accumulation schematic 4 is what often people classify as a falling wedge. This is a more traditional accumulation schematic. Again, usually the longer the time frame, the more reliable the data. For those of you that have been joining us since the beginning, we've been going over these accumulation ranges since March of 2020, when we hit the first spring of this bull market, which was phase C. Now again, the longer the time frame here, the more reliable and usually the more poignant the data. And that's important because the shorter the time frame, the less succinct our relative outcome might be. So in reaccumulation schematic 3, you have here what is traditionally looked at as an inverse head and shoulders. Now these are all bullish accumulations schematics, right? So let's take a look at where we are on Bitcoin right now. So we had a nice rounded top. And again, I do not believe this is the end of the bull market. If you have joined us for quite some time, we took out a big chunk of our position, around $56,000. Reason being, we were at a really interesting risk point to reward, where there was equal risk and reward both to the up and downside, so it made sense to us. But here, back in August, we had this really unique analog. Now I'm going to get rid of our Bollinger Bands here so we can kind of clean this chart up, and just for fun, let's use the candles so that it looks more apparent to people. So back here in August, we had what became an intermediary distribution, and then right afterwards we hit a reaccumulation pattern and then continued to move upwards. Now again, what's important to remember is that the reason we were following these smaller reaccumulation and distribution schematics is because ultimately we were following a much bigger accumulation range. Here again, you can see where the inverse head and shoulders would have been one of the apparents, again, very similar to what we see here, where the phase C represents the spring below the box, and right here as well. So what's important to recognize is that when we're going over ideas like scale and variance, is to understand that the fractal nature of the universe allows these repeating patterns to take place over and over and over again on different time frames. So again, here between August and September, we did have an intermediary distribution pattern before it became a reaccumulation schematic moving up much higher. And as a matter of fact, you could even look at this as a reaccumulation after decline, which is another reaccumulation pattern we've seen, and we do have in our charts here as well, which is a reaccumulation schematic 4, where you have a temporary intermediary distribution pattern. This one looked like a rounded top, stopped against our regression line and continued up. So we've not actually changed any of our pattern outlooks since we drew them back in March. You can go back and look at all of our videos. They have remained exactly the same. Now, one of the important parts to recognize, well, two, is these regression lines. So the lower regression line is created by the bottom of the spring through the test, the LPS, and we continue to parallel run from the top of each of the automatic rallies and the secondary test into our previous buying climax. And as you can see, what we've done here is found a nice intermediary range. And as right from the get-go, here is a nice rounded top, and what I believe to be an intermediary distribution, or intermediary reaccumulation, excuse me. This is where I don't believe this is the end of the bull market. There's a few reasons to signify that, but we'll go over that later in today's video. So, a big part, as people are starting to learn more about these particular patterns, they keep asking the question, oh, sorry about that. The volume should be much better now. I apologize for that. Let's see here. It's always a difficulty with moving around so much. is the microphone somehow got unplugged, and yeah, whatever. It's okay. That's the way it goes. So these reaccumulation schematic 4 is actually kind of what I believe we're witnessing now, which is where we did have we had a rounded top that's moving into a reaccumulation schematic. Now, again, I think that we're actually probably going to spend about a month or two here. So we can look at a smaller time frame, like a 45-minute, and we can start to imagine very, very clearly here that maybe this is a reaccumulation schematic, something like schematic 1, or probably more similar to schematic 2. Again, look how similar these might be, right? Now, the real downside here is, again, knowing that scale invariance means that the function of time is fractal in nature, and depending on the time frame we're looking at, you could be like, okay, well, here was phase A, now we're in phase B, this is maybe phase C. It's probably much better to go out to the 4 to 6 hour and then go, well, we're not even in phase A yet. Now, a lot of people draw up schematics and patterns like this. They're like, oh, it's a pennant, we're looking for volatility. And often what will happen is you'll get a breakout, people will get extremely bullish, and they'll go up like this, and then it will come back down into a spring. So these intermediary pennant patterns are almost useless to pay attention to. They're a very short time frame. One of the reasons why I love these horizontal patterns is because it gives us a really well-defined way, and I don't believe that we're actually out of schematic B yet and into schematic C. So I think, I've said this a few times, that we're probably going to have a month or 2 month long reaccumulation schematic that basically is designed to bore the average retail investor. You know, we've seen a lot of buying come into the market, right? So there's a few things I wanted to go over that I thought were kind of fun. Aside from the reaccumulation schematics, there was this one. I thought this was a nice idea. This is a logarithmic bands as they move, and the decreasing time that it takes for the Bitcoin market cycle to engage itself. Now, as you can see, back in 2013, we had this temporary upthrust and a reaccumulation pattern that took place almost the course of a year, much shorter than the say 2015 to 2020, or sorry, 2015 to 2017 accumulation cycle, which was almost 1,200 days. And again, here, when you're looking at the top of 2019 to 2020, it was another 1,000 days. And what this band is showing is that to some degree we're getting these shorter and shorter extensions throughout the time frame. Now, when we look at it on a linear function, it's not as noticeable because both 2017 and 2020 were effectively basically identical in accumulation time. And this, again, the reason why this is important is because the reaccumulation schematic, as we had charted down here, is a relevant function to the previous reaccumulation or accumulation schematic that took place here. So way back in 2014. And the reason why we don't use log charts is because we want to understand time through a linear movement, not through logarithmic, right? Because you live on a day-to-day basis. Your life is not logarithmic, so it's easier to view these charts on a more relative function. So here, the entire box of accumulation took 1,253 days. That's including the previous buying climax. And as we scroll out and we do the exact same function, although we are charting a smaller reaccumulation pattern here, let's do the same thing and assume that what we're witnessing is a buying climax to break out of the box accumulation schematic, which was approximately 1,120 days. So this accumulation cycle compared to the 2017 accumulation cycle was only 1,200 days. That means two things. A, you had 1,200 days to accumulate Bitcoin at any price below $20,000. Now the downside is new investors usually enter the markets at the exact wrong time at around $20,000. They see the market price go down and they go, oh my God, I lost money, instead of continuing to accumulate Bitcoin throughout the course of that 12,000 or 1,200 days and average their price to the downside, getting a better price of their asset accumulation over time, because they don't understand that these are repeating cyclical functions that we've seen through multiple bull market cycles now, where you have an accumulation pattern. Had you done what I did, where you buy the majority of your Bitcoin at $1,000 and go, oh no, I made a mistake. Well, not if you keep buying, which is exactly what I did. I continued to accumulate along the process when I had extra capital. And over time, this is the best form and function to play. you can almost ignore price to some degree. The reason why I like these patterns and chart recognition is to understand how the scale invariant function repeats itself over time. So, where are we now? We are in a place where the market is going to basically bore the average investor. This moment is designed to get rid of the average investor. And there's a reason for that. It's because people are generally, let's say, they think in short time frames. They think, oh my God, if I had bought here and I had sold here, my life would be set. Or if I'd only bought Bitcoin back here at $1,000, you know, or if I had bought, because here again, if you had bought at $20,000, you would have thought you were maybe stupid for 1,200 days until all of a sudden you're still up. Even from the previous buying climax, you would still be up 100% had you done nothing, right? And I think this is a much more important function, especially for those who are learning to invest, is to really repeat the understanding of the nature of scale invariant functions and the repetitious cycle of a bull market and the way these patterns repeat themselves. Back here, again, from our buying climax, we saw the exact same thing we saw today, where we dropped back down around 40%, we touched the previous regression line, and then we shot upwards. Now, the only real difference between this market cycle and the last is the amount of money and the intelligence of the investors that are on the big side of the trade, which is going to create these much more volatile to the down and to the upside positions. So again, I think what we're very likely going to see is an accumulation schematic that takes place for probably between 40 to 60 days, somewhere between here and August. And again, this is designed to get rid of the last few weak hands. And what the big players do is they basically accumulate anything near the bottom of this reaccumulation pattern, and often will sell near the top to try to see how low they can get the price. At least the more technical and advanced ones. My strategy, if you look back at our videos, we sold a big chunk here and we've just been waiting effectively. I did buy more Bitcoin at this drop around 30,000. And I'm waiting for the rest of the play to continue, just in case we get a dip to 24,000, which I don't believe is likely at this point. But a lot of people think that's what's going to happen, and that to me just sounds like rubbish. You have some of the world's biggest investors, Cathie Wood, Icon, Tesla, have buying billions of dollars, continuing accumulation strategies. Cathie Wood came out a few weeks ago and started to accumulate Ethereum for the first time in their fund as well. So we're being moved by hands with capital that most of us would never see in a lifetime, right? So keep that in mind. Okay, let's go out one more time. Let's take a look, a little bit of look at the Glassnode features. Again, the stock to flow model doesn't need to be exact. We just need it to be relative. Somewhere between $100,000 and $80,000 is probably a good relative function price for Bitcoin throughout the next 5 years. And again, remember that the stock to flow model does end in 2025 when the halvenings cease to exist, and Bitcoin is supposed to go off that and focus solely on transactions. So from here, what we've been doing over the last few years is using the stock to flow model kind of as a relevant function to understand what it costs to mine and then sell the Bitcoin that you're mining, and try to keep that business running effectively. Another thing we like to constantly take a look at is our reserve risk relationship. And as you can see, we are actually almost back down near the less to no risk accumulation zone. If we hit $20,000, that would be an absolute zero risk accumulation for any of the big funds. So this whole area between here and if we were lucky enough to get to $20,000 represents a no risk scenario for them. But as you can see, back in 2012, 2013, you had these big run-ups and then drop-downs that took 2 to 3 months of reaccumulation before you saw bang, bang, big spikes. Another good one that we like to use is the exchange balance percent. And this just shows the amount of Bitcoin coming onto the open market. We had been in mostly accumulation up until May 18th. And we are still declining. Although we did have a chunk of supply come into the market, it hardly affected the price compared to how much supply came in. So as you can see, we had approximately 0.1% of all Bitcoin come onto the open exchanges, and now it's been started to chew up a little again. And I think that you can see a new reaccumulation schematic both in the balance on exchanges and the price taking place here. So What's the point of all this? Well, number one, I think it's to help calm the average investor's mind who may have made the mistake at buying at the exact top, and realize that that's not a mistake if you understand the value of any asset that you're accumulating, and you know that these cycles repeat. And more importantly, that the risk from Bitcoin is basically gone at this point. Yes, it is volatile, but it is not risky compared to when I was buying it at $1,000, where it could have totally failed and gone to absolutely zero. I don't believe Bitcoin will ever go to zero. And because of that, I believe it has a very high likelihood of continuing to follow these cyclical patterns that we've seen in the past. So, again, I think that we're going to see an accumulation schematic, probably similar to 2 or 3. Although I think that looking at it on anything less than the 6-hour or the daily pattern is probably makes it less succinct. We have probably just exited A and are starting into phase B, and we'll be looking for a phase C test somewhere in June-ish, middle of June, let's say, before continuing higher. And again, this whole area is designed to get rid of the weak retail investor's hand and to bore them, to make them think, why didn't I invest in Shiba Inu coin? Or let's just see what else has got some green side to it today. Oh, nice. Lots of red on the markets. Okay, so let's use that moment to kind of take a look. So we like to use the volatility index to measure general sentiments in the market. Here again, we've been following this very volatile trend volatile trend of volatility within the market cycle since the pandemic has begun, right? So we see these big spikes in human emotion coming in multiple times, but they have been decreasing. And we see that we're actually on an uptrend right now. You know, the Biden administration, I don't want to get anything about politics, but they're just like every other administration, trash. Right? I don't like governments at all. Let's leave the politics at that. And they don't have a whole lot to do with assets over time. Technically, if you look, all asset prices have only ever gone up. And you might think, well, why is that? One of the important things to remember here is that currency is being devalued on a day-over-day basis by this massive amount of printing. So if we go to the weekly, first off, we'll take a bigger time frame analysis on the US dollar, or actually maybe the monthly, because we're going to want to look back 20 to 30 years here. This is the 30-year time frame for the US dollar, at least from 1986. I don't know why we don't have more data than that right now. There used to be further back, but as you can see, they probably just don't want everyone to see how horrible this is. Technically, what we're witnessing right now is an absolute degradation of the United States dollar. Right, and what the kind of line is that, Tio? Jesus, I want what drugs I'm doing. There we go. That's a much better line. Okay. So we've been on a downtrend in the US dollar since prior to 1986. It's just all the data TradingView is giving me right now. And right now we're about to break a key level, and we could come tumbling down as the governments print trillions of dollars more and shove it into the system. So right now, if we look on a closer time frame, we drop into the daily, we can see that we're being held up by a very, very thin trading range, and we've just broken through that. So if we break much lower, we're going to basically go into some type of free fall moment for the US dollar here as well. So if we break below 89.366, we're going to likely continue downwards. And in that case scenario, I believe we're going to see a continuation in the market upwards. Now, since 2016, if you've been friends with me or not, I've said something that was really out of character, where people keep calling for stock market crashes. I've called for the first time ever market melt up, where because the dollars are being inflated at such a high level, you will not see a market crash in any way, shape, or form in the ways that we would have thought. So here's all the way back to the 2008 apparent market cycle low. And as you can see, since the 2008 crisis, you would have, well, first off, always buy a crisis. That's the key point there. But we've only gone up. And even more importantly, look how irrelevant the pandemic was in terms of downside. And here, back in 2016, when people were calling for a market crash, I started to call for the market melt up. This would be the first time ever in history where the market will crash upwards, because assets will always retain value and the dollars will not. That is important to understand. One of the general theses for owning Bitcoin is that the US dollar is being destroyed day over day. Again, We look at the monthly chart for the dollar. It has done nothing but decline. And in that same time period, let's see, at least from 2008, here's the 2008 mark. Even though the dollar had some strength come into it, the NASDAQ has only increased. We have not seen a market correction of any kind, right? So do we collapse the asset layer? Probably not. Businesses that are functioning, generating revenue will continue to do so regardless of whatever we use for money and currency. The dollar, on the other hand, is fucked. Anyways, I hope that's valuable. I hope you guys understand why asset accumulation is always smarter. Basically, your function to ignore the dollar price is a smart way to go. And again, people are like, oh, betting on the stock market is gambling. No, it's not actually. What's gambling is trying to take a position here and sell here to buy back here. If you've been every day buying the stock market, no matter what fucking day it was, you would always be up. The same exact thing happens for Bitcoin. Had you been buying Bitcoin every day since its existence, you would only be up. Keep that in mind. The US dollar is dying, currencies are failing, and assets will continue to maintain value. Do not get caught up in the day-to-day price movements. It is effectively a worthless scenario for you, especially if you're a new or a beginner investor. It is significantly better to think about the macro perspective and continue to invest. Anyways, this is Teal with the Arcane Bear. I hope you guys enjoyed today's content. Please remember to go to our social media channels and follow us. And for those of you that have joined us, thank you. I want to give a huge shout out for everyone that's followed us on Twitter. We broke the 10.3 thousand followers. I am absolutely stoked about that. Let's see. I don't know who Rune is. We're going to unfollow them. I like to follow as few people as possible. And then also, if you haven't yet, be sure, well, you're on YouTube here, to like and subscribe to this channel. We bring consistent, let's say, well-rounded macro perspectives to the market investor to help bring some type of confidence and sanity to what's going on. So please remember to hit the subscribe and that little bell button. Leave us some comments. Give us your thumbs up. We appreciate all of your guys' support. We will see you again on the next episode. I'm going to be flying to Bali on June 19th. So I'm very excited about that. I will continue to do content too, by the way, guys. Don't worry. It'll be my evenings in Bali will be your morning. So instead of me having a morning with your morning, I'll be having an evening with your morning, or a morning with your evening. But either way, we will still be able to do videos together. I'm very excited about this bull market. So please subscribe, like, share, all those fun things. Go to all of our social media channels and the links down below. And we will see you guys on the next episode. Oh, hey, actually, I'm going to leave you with a little bit of music today, just because I know you guys love that. We'll do something a little bit different than normal. Just a quick little ditty, maybe only a minute or two, because I'm not even sure if the instrument I've just grabbed is even in tune. It may or may not be. Somewhat. To the Arcane Bear, thank you all for joining us today. I had a great time with you guys as per usual. Remember, stay classy and enjoy the ride. Boom.